Hi, everyone. This is our last full week. Brock, Shahab, last full week of trading for the year. Next week, Christmas. So you better not cry and you better not pout. I know where your stops are and I'll take you out. Dale Kloss is coming to town. Okay? So who's been a good boy and girl this year? Raise your hand. Because here's my here's my Christmas gift. How am I feeling? Exhausted. How about you? That's your middle name? Dale? Okay. Dale Evans, it's a girl's name. Anyway, that's what I heard on the playground. I want to share something that at times you get similar formations in different instruments because of how they're related, and then get the message of what it's saying. Okay. It could be off from day to day, maybe even week to week, but look at this weekly gold chart. Pretty bullish unless we take out 1450. So keep this in your imagination right now. And now look at this weekly chart. Does it look similar to you? Okay, now keep this in your imagination and look at this weekly chart. They all look like they're going to have continuation moves to the upside. So, hi, Monica. So, what's it mean potentially higher gold, US dollar yuan heading up, which means, yuan weakness despite a trade deal. And TLT means lower yields coming despite risk on still being here. So, all of these three charts, I guess nothing has an effect on S&Ps. But anyway, I want you to get the theme. Here's TLT. I expect an upside breakout for new highs. Gold, I expect an upside breakout to new highs. And US dollar yuan, I expect a breakout to new highs. So all of that is not really such a great message for the economy or trade or confidence, right? So I wanted to share that with you. Those are the messages I'm getting that are a little bit more, swing related, not scalp related, maybe even position related with what I see going on there. Because if all three of those manifest, I have to think we'll at least get a 0.5% correction here in the S&Ps. So there's something with my charts. The prices aren't updating on the side here, but they're changing up here. So one thing I could say about S&Ps at new highs here, we took them out by 5 handles, diverging, which is a little different. We were diverging, but above 70 up here. We're not at this point confirming this high in the 1 hour, not confirming it on the 4 hour, not confirming it on the daily, and on the weekly, it's probably going to take, S&P's 4,200 or 4,000 to get the weekly RSI reading back to, what we had in January of 2018. Okay. So, dollar still may have another wave to the downside. There are some people that are a little contrarian. In fact, what I said was Friday, if you were a dollar bull, you didn't want to see it trading back above it, this level, this 97.04, which it did, but it's giving it back up. So, it may be too early to fade the dollar. I remember 112 was a target when we were in here. I forgot why, but I did notice this weekend. So the 50-day contained it. we get over this 112.5 now, so we were thinking 11.5, but 112, I remember that being a target, and Greg also had that for initial target, then a pullback, and then another rally. So that's possible. But if we start trading back under this 110 level again, look how many tests we've had back under 110, then I think the Euro bears are going to be right. But I still favor this happening, eventually going above this 112 level, and then the other objective is going to be near the 200 day on the euro. Okay. Any questions? Yes. Micros. Oil. Still short this with a 150 stop. Okay. So still diverging. Keeps trying. We'll see. Just one. Oh, okay. All right. So also pay attention, FX Cole, more to what you're doing than what everyone else is doing. Just a hint. Okay. Don't base your entries, exits upon what I do or anyone else for that matter. What if I took off for a few days? Would you know if I was still short or not? Anyway, yes, I'm still underwater. In fact, scaling in here again. So I think this might be the week, and the boy who cried wolf will now pass it to someone who doesn't cry wolf. Okay. The man who teaches his children not to live in would have, could have, should have land, which is a great life lesson that took me a lot longer than being a teenager to learn that one. How are you, Blake?
Good morning, Coach.
Hey, you tired?
Yeah, it wasn't, it's not, well, the market's making me tired because it's so slow. We were actually out late last night. It was a surprise, gift for my family for the holidays. Uh, our neighbors, they, had a friend that rented a trolley. Well, somebody fell out and they rented like this trolley with, there's enough room for 30 people. And it was
Wow.
great. We
Is
ran
that in
around.
Scottsdale? At the,
Yeah, around
yeah.
town. I mean,
Oh, okay. Yeah, I think I remember those.
well, no, well, it was one of those, but
Oh,
you rent a trolley and then you go look at Christmas lights.
nice.
So yeah, it was, and it's a very inexpensive way to do it when you're doing it with six families, so.
Plus, you could be a little inebriated. After.
Unfortunately, I had to drive to the trolley, so
Oh,
I knew I was working today, so
yeah.
no, I that would have been the case if I wasn't
I
drunk.
used to love driving around Squaw Peak in Arizona for the Christmas and Camelback Mountain. People really went way out for
Yeah,
doing it. So
yeah,
yeah,
it's cool.
good
It's
times.
fun. We were late. We were out late last night. Well, for me, it's when
Eight,
it's
9 o'clock. It's late.
like 9:30, 10
Yeah,
o'clock.
me too. I know.
So anyway, but that it really, just we're today. It's the market's so slow. I woke up this morning. I'm like, did the market even move?
Yeah, trading
Um,
by appointment. Even the euro, it looks like, unless it's my trade view trading
Yeah,
view.
no. It's pretty quiet. I mean, we're up like 20 pips right
Yeah.
now. We bounced a little bit, maybe a little head and shoulder developing here. Everything that I
Oh yeah.
talked about on the week ahead video.
God, it
Is
didn't come out in my stream. I was looking for it.
Oh,
Anyway, it's
well,
all right.
if you didn't know, we post on YouTube too. So
Okay. All right. Maybe I'll sign up and join
maybe,
join the community
yeah,
today.
good idea. You should try that. Um, for the week ahead, I pointed out that the euro had a really big rejection um on Friday. Now, this candle that you see here, this big, this big long wick, this is like a shooting star type of candle. It should be a bearish reversal, but the euro, and for good reason too. I mean, we couldn't close above the 200-day moving average. We pushed stops above the highs. You can see this little triangle here, or a rectangle. I'm going to get rid of that right now, but you can see the false breakout above the highs. The false break above channel resistance. And I'm actually surprised that the euro is grinding higher. I guess I shouldn't be surprised because stocks are moving higher. So, the euro yen should be grinding higher, which it is. The euro yen is up on the day, but we are stalling. Just so you guys can see it, we're stalling again at the 200-day moving average. And that's not to say that we won't break out today, because it's early in the session. It's not like we have an hour left and it looks like it's just going to stall here. By the end of the day, we could very easily be at the low end of the euro today, which is a very tight range. But just note that we are still under the 200-day moving average. That 200-day moving average comes in at 111.51. And this is also, again, I want to point out, this is channel resistance. So let me just state, if you're going to short the euro, this is probably the place to do it. I'm not saying, and I'm not advocating that that is the right trade. I'm just saying, if you guys are bearish euros, this is probably a good place to do it, especially if we do, develop some sort of head and shoulder pattern. Now, let me just do something really quick, and I'm going to delete this just to not make my chart so messy. Here, let's take this high to low. And let me some adjustment here. We can do it like that. So the 50% retracement is actually 111.55. And that might be the top end of the head and shoulder. So if I had to imagine uh, this chart, let me draw really quick. So if I had to imagine, if this is a head and shoulder pattern, it might look something like this, and roll over here, something like that. If it's going to roll over, like I said, I'm not trading the euro at this moment, but that is like some food for thought. Okay, let me go ahead and delete that. Erase, erase, erase. Can I do this? Oh, I can do that. Yeah, look, I did it. Okay. All right. So, that's the euro. The cable, also very similar story. It's actually holding up pretty well. We did have some pretty big rejections over the weekend. We rejected this 618 retracement. Now, this 618 retracement is from the highs back in April of this year to the lows. And it left us with you can see it right here. Draw a horizontal ray. It left us with a false breakout as well. Now, the cable, there's a lot of let me remove that. There's a lot of articles out over the weekend regarding UK, the FTSE, and how it is, there's going to be a massive amount of money pouring into the UK. I'm going to state that I think going into this next year, European, Asian, and even Latin American stocks are probably going to outperform the U.S. equity markets. Now, that could also, because if you think about what I just said, you might go, oh wow, okay, let's just buy UK stocks. No, I say they're going to outperform. We could have a down year in the S&P. I just think that uh, other markets around the globe will fare a little bit better. I think that a lot of uncertainty will be, lifted from the UK equity markets, and we'll probably see, UK equities blast higher. Matter of fact, I think move higher as long as the S&P is moving higher. However, I forgot this line here. Let me erase that. Okay, so let's take a look at the UK's. This is the FTSE here, the top 100 stocks of the FTSE. Let's just see where pretty key resistance is. Now, like I said, if you're bearish equity markets, that's fine. I just think that the UK, like the UK stock market, is probably going to do a little bit better than the US stock market. So if you see a sell off in US equities sometime next year, that doesn't mean that that the UK stock market would be shielded from it. I just think that if you are a dip buyer in equities, you probably got to look at the FTSE. So right now we're in a triangle. We're and right now, as far as I'm concerned, as far with the FTSE, there's probably nothing to do at this moment. What I'd probably do here is I would do this. Let's take this high to low. We're at 127% extension. We might stretch here, especially going into the end of the year. It seems like we have so much uncertainty lifted with the U.S. stock market that that maybe we get stocks grinding higher, melting up to year end. We'll see. But if that's the case, the FTSE might actually, make a move towards 7,700 here on the UK 100. That I think is entirely possible. Maybe even try to, post a little bit of a breakout. But like I said, the pound overall, I think the pound actually still looks pretty good. I would be looking to buy dips rather than trying to chase up here, knowing that we had a failed breakout above these highs, above this resistance here. Um, I'd probably be using a New York Fed's 32-day repo operation oversubscribed. Interesting. So everybody's like kind of watching the repo market. Something just to keep an eye on, and it's not having any effect on the market right now. Okay, so anyway, if I was trading the cable, probably what I'd look for is a dip down towards 132 to be a buyer, versus trying to pay up at these prices. And I'm not saying that it can't go higher. I'm just saying that rather than getting a case of the FOMO here, the fear of missing out, buying on dips seems more appropriate to me. But that doesn't mean that we're going to get the dip. If the euro, decides to close above the 200-day moving average, that could be a catalyst that just drives the pound, back above 135 going into later this week. Again, just some food for thought. The Aussie and the Kiwi, these are also both pretty important charts, and I'm going to show you why. First of all, the Aussie, we rejected the 200-day moving average. I was a little skeptical about this little false breakout right here. You can see it above this resistance. That false breakout couldn't close above the 200-day moving average. Had a pretty bearish close actually on it with an outside day. However, we're holding this trend line, which I think is rather impressive. And it's not just the Aussie, it's the Kiwi as well. Notice the Kiwi, this is a multi-year trend line, 2018. Okay, you can see we broke above the resistance, closed pretty much on it, but let me move this over. But the dips have been very well supported in the Kiwi. And remember, the Kiwi still has an inverted head and shoulder pattern that still points to, another 100 pips higher, roughly, from where we're at. So it's hard for me to be bearish the Kiwi, knowing A, we're above the 200-day moving average, B, we're above the broken trend line, C, we have an inverted head and shoulder pattern that still points to 67 cents. So now, will the Aussie and the Kiwi outpace the euro and the cable? It's entirely possible. And one of the reasons why I think it's entirely possible is that we have, if you look at like copper, for example, where's copper? Right there. You look at copper looks very similar to like the Aussie dollar. Okay. We broke above this trend line, which is a multi-year trend line, and we're holding above it. So as long as copper continues to look, strong, then I think the Aussie and the Kiwi will continue to hold on to its gains as well. So that's something to pay attention to. Now, Dale pointed out that we, excuse me, really quick. I get a drink of my coffee. By the way, if I sound a little horse. Is it? Hey, coach, are you here?
Yep,
Yeah. If I sound a little, is it horse or course? Horse?
a little hoarse.
I sound a little hoarse today. It's because I was screaming over the weekend for my son actually lost their tournament. This is the first tournament they've been in this season that they haven't made it to the semifinals or the finals, and it was it's very very slim losses. They just couldn't put the ball in the net, and I was screaming a lot this weekend. So unfortunately, I do sound a little hoarse, if you will.
Okay, buddy.
Yeah, but I wanted to point out what you pointed out a little bit earlier with gold. Gold still looks really bullish here,
Yeah.
and I can't get over the idea of if gold is looking as bullish as it is, what's that telling us about the rest of the market? Now, I look at the S&P, and it is Monday morning. We've got the market grinding higher, and as you would expect, we've got all these trade tensions that have eased. We've got the China US trade deal, phase one is pretty much done, minus the signing ceremony, but for all intents and purposes it's over. We got Brexit out of the way. We've got we're going to have Brexit out of the way. We got the UK elections out of the way. We got USMCA that looks like it might be signed this week. So
got the Fed out of the way.
We got the Fed out of the way. We got the ECB out of the way.
Everything.
And everybody, it seems like we're getting that Monday push. Probably over the weekend. There was a lot of articles over this weekend that it basically says coast is clear, time to buy, and yet.
Oy.
Yeah. There's this really, if you go to Market Watch, this guy from I think it's Mitsubishi Financial Group said back up the truck. Back up, so anyway,
Blue light special.
it's blue light. Yes, definitely.
Yeah.
We have a great
excellent
generational
valuations.
low.
Excellent valuations.
Yeah, well, earning multiples could increase at least by another, quarter basis point from here. So that's at least good for another Dow 3,000 points. Whatever. Whatever all the arguments are.
Before, when you were talking about the indices, but we all know, and I think everybody in the industry respects Gundlach as an investor. I mean, he manages billions and billions. So, and I completely agree with this. He has the theory. He said that the 80s were the decade of the Asian stock markets, the 90s of the European stock markets, the 2000 emerging markets, and the decade that is just finishing, the American stock market. I mean, about overperformance.
Mm-hmm.
And as we thought, every single example that I just mentioned, that he mentioned, for example, let's start from let's say Nikkei that topped at the end of 89. It hasn't even tested that top again. So he believes that sooner rather than later, the US stock markets are going to probably put in some type of a generational high, and then we're going to have other markets overperforming for decades, as it happened with every single other example. And I don't disagree with that.
Maybe it'll be commodities again.
Well,
I don't know.
Well, no, it's just I think that I watched that interview with Jeffrey Gundlach as well, and he does talk about how we'll probably see a generational top here in U.S. equities at some point. Now, is it going to be today? Probably
no,
not. And
probably not.
January, maybe April of next year. Who knows?
Well, if you say it started the generational bull in 1982, 2 generations takes us to 2022.
Well,
from the beginning.
No, he says that each, let's say, not continent exactly, but each sector, I mean, each area had its own decade. Asia in the 80s, Europe in the 90s, emerging markets in the 2000s, US in the 2010s, and he believes that the next decade is definitely not going to be the US overperforming again. He actually believes that, he said that for the rest of his career, which he sees being at least another 20 years, he doesn't believe that we're going to see again the high, whichever high we end up putting in the US stock markets.
Whether
That's what,
it's today or 2 weeks
yeah,
from
or in a
now
year
or
from now.
a year from
He,
now, whatever.
he believes that it might last like for another year or two, worst case scenario, but he believes that that high, whichever it is, we might not see for many, many, many years again.
And he's still looking for lower yields, right, Steve? He didn't think the 10-year would get above 210 from what I recall.
He's looking for higher yields. In the medium to long term, he believes that the market will be. I agree with him at that as well, as you know very well from being on the webinar with me every day. He believes that it will be completely unsustainable for central banks to manage to hold yields
Rates
at
down.
such
Maybe he's
you
just
know,
looking for one more decline because he didn't think 10 years would get through 210.
No,
The
he's not bearish stocks or bullish yields yet, but he believes that we're getting there. Yes.
Yeah, okay.
Yeah. So, with all that being said, I sit here and I look at gold and I'm like, why is gold where it's at? And I'm definitely a gold bull above 1500. So, this is where, you see the the
And pull up
arrow.
the weekly WAN chart after that, Blake, and you'll see how similar it is.
Well, here's yeah, I mean, I guess
Same kind,
yeah, same type of pattern. This is obviously a little bit more engineered.
Yeah, for sure it is.
So
Well,
I try not to I try not to look at technicals on the renminbi so much, but
Yeah.
but you never know. I mean, yeah, if we start breaking out to the upside here, then that would probably be very similar to a gold.
Yeah,
rally in
and the bond weekly supports it, lower yields, higher gold prices for another surge, maybe into the spring, and who knows, maybe a little risk off.
Yeah.
I just see those three charts look like they're, brothers and sisters.
Yeah, so we'll see, we'll see what equities do, but let's just put it this way though. We are in the last full trading week of last real full trading week.
Yay.
There's probably going to be a lot of
Games.
there's going to be a lot of lack of liquidity as actually, just less liquidity. There's going to be, end of year pushes in currencies, in indices, and try not to get in the way. I mean, if the market's pushing in one direction and let's say you happen to be opposite that direction. So whether it's like, let's say you're I'm just going to give you an example here. Let's say you're short the Aussie and then the Aussie starts breaking out and we're talking, here over the next week and a half, we start breaking out and you're just starting to see it run. Don't get in the way. Don't this is not I guess what I'm trying to point out is this is the time of year that you don't want to be fading moves, especially if they're strong, because it's end of year, flows that are going through the market. And, just, if you happen to be the other direction, just let yourself get stopped out and let it go, because I've seen so many times the market just push and I've watched, the day
remember
before.
the euro? You remember the euro a few years ago during Christmas time that it put in that high during the most illiquid days.
Yeah, I remember, and actually, what
above
it was.
140, I bet it stopped out everybody above 140. I remember. I totally remember that.
Yeah, and I remember the Swissy was doing something very similar. Like maybe it was, it's like right around here. You could see, it was this is like Christmas of 2011. It just was just grinding lower, and you're like, whoa, when's it going to stop? Or maybe maybe it was like 2014. I forget what year it was, and and I sat there and looked at it and go, man, this is just destroying people right now. And
speaking of incidents like that, do you know
hold on,
when the all-time high in the Nikkei was?
Hold on, we just
29th. Yeah, we have data.
yeah, let's just watch this data really quick. Just really quick.
US New York Fed manufacturing 3.4. Probably you haven't refreshed your.
My browser.
Yeah, you haven't refreshed your browser. It came out 3.5 versus 4% expected.
Okay,
My
got it.
data flash is refreshed.
God, I didn't refresh mine because mine had
So
been sitting there for a while.
the all-time high in the Nikkei was at 29th of December of 1989. So it's very frequent to see, these type of moves and highs or lows and squeezes during the Santa Claus week, which is considered the week between Christmas and New Year's.
Yeah. So just again, it's just I think it's just something that you should keep in the back of your mind. If you're trading, just be really careful about what you're doing and about what you're, what positions you're in, and if you're trying to fade the market, just keep your stops tight. And if you find a good trend and you get on it, try to get your stops to break even and see if you can ride it out a little bit. I think that's the way you have to approach this, and tread lightly. To take smaller positions. The liquidity is going to start getting really poor after this week, probably towards the end of this week. So we still have a lot of data, and there's still going to be some moves this week. So don't just turn off your computer and forget about it. There's probably going to be some decent moves this week. So, but I just wanted to state that, and I'll pass it over to you guys. And I want to say happy Monday, and we're going to have Adam Button here today, which is really cool because I'm a big fan of Adam Button and Forex Live. So that should be a really good interview for you guys today.
It's unusual for Adam to really say he wanted to talk about something. He'll cover everything, but he seems to believe that there's something pretty big market related happening in the oil patch with their debt that he wants to address.
Awesome.
Yeah.
I think it's going to be great for everybody here. So you guys have a great one. Steve, I'll pass it over to you, and happy Monday, and
Thank you, Blake.
happy almost Christmas, and happy Hanukkah.
Yes.
All right.
Happy Hanukkah.
All right. Thanks, guys.
All right, Blake.
Hey, Stelios. Good morning. All right.
Morning, everybody.
Hey, Stel.
All right. Thanks, Steve.
How you doing, Coach?
Good, buddy.
Good. Same here.
Good.
Had my eldest daughter's birthday party on Saturday. It was fun. All right. So what have I got to say? First of all, let's start with the UK. Blake talked about it briefly. We have Boris Johnson has announced that on Friday he's gonna be passing the Brexit agreement to Parliament. If you remember, last time he did that, it was actually accepted, but not the timing of it, because he forced it. He gave MPs like 2 days or something like that. So, but now he has a big majority, 39.
And a lot of time ahead of him.
Yes, big majority. I think 39 MPs, if I'm not mistaken. And he can pass anything he wants, even with dissenters within his party. I mean, it's almost a done deal, whatever he wants to do. So let's see what happens. Let's see what, excuse me. He's been talking about the free trade agreement with the EU going forward. There's obviously a million things to take care of, but as I said on Friday, I think this election result is a positive for the UK, is a positive for sterling, and we see how it goes. But obviously, as I said before, there is a lot of work to be done, a lot of things to be ironed out. There's so many. It's a very complex thing, right? This Brexit deal. So let's see how he handles that and how the EU people handle it. We had some data this morning. PMIs from Europe and from the UK, all pretty bad data actually. So we had German manufacturing PMI 43.4. I mean, this
which is
very
deep in contraction territory. Yes, deep in contraction territory.
And the Eurozone manufacturing PMI down from 47, I think, to 45.9. So it's all going south.
Yeah, literally.
Yeah, same with UK actually. I mean, you were seeing manufacturing services PMI both below 50, and manufacturing is 47.4. So that's a considerably lower number as well. Excuse me. I mean, I guess, you know, with this whole Brexit story and all these months of uncertainty, you expect these leading indicators to fall. I mean, you do.
Yeah, and let's not forget that we're in a very mature business cycle, that the economies are not really in good shape. I mean, put all that in combination, and every single slowdown that we get so late is a huge danger for the beginning of the recession, right? I mean,
Yes.
unless there is anybody that really believes that we found like a magic potion that eradicates business cycles from this point forward, you know, it's something that's going to happen, and you know, history and all the real economic data show that it's something that should happen, should have, probably would have already happened if they weren't, like, you know, trying their best to postpone it at least until we get, you know, this presidential election next year.
Yeah. Otherwise, we had very little. I mean, it's all about numbers we get later this week. We have a couple of interest rate decisions which are interesting. Also, I read about Sweden. They're meeting this week, and apparently there's a talk about them hiking this month. And if that happens, then essentially it's an admission by the central bank that the negative rates don't work, because they've been trying hard. Inflation is still not going high. And,
excuse my language, but no shit, Sherlock.
Yeah,
I mean, this experiment with negative rates is, I mean, it's beyond naive. It's destructive. I mean,
it suits the governments because they have all these.
I think it suits nobody, Stelio. It suits the governments in the short term, but in the long term, it's going to end up doing more damage to everybody, including the governments. But yes, you know what it is.
Which government have you seen that thinks long term?
Exactly. It's a political cycle. So you're in government and you're. Yes, that's very true. That's very true. Because
in the short term, they get to borrow at negative rates. They can.
The Chinese, coach, as you mentioned, but why? Because they don't have the political
elections.
Cycle.
Yeah.
Yes.
And I do believe the Europeans are longer term thinkers than the United States.
Depends on the country. The northern countries in general have a lot more.
Norway. Yeah.
Not only Germans, for example, don't you see how resilient they are to pressures to also become fiscally irresponsible? The whole continent is in essence begging for years Germany to become fiscally irresponsible, so they can, with the leeway they have in the fiscal space, so in essence they can give some breath to the Eurozone economy. But that's not real economic growth, you know what I mean? Just persuading Germany, because they have the room, the space to go deeper into debt as others have done. Yes, will it stimulate in the short to medium term the Eurozone, the European economy, and somewhat the global economy? The answer is yes, it will. But is this the proper tactic that a government should follow? The answer is no, it isn't. So good for them for resisting, you know, the voices from everybody else, like, come on, why are you running those kind of surpluses? Simply because healthy economies run surpluses. Healthy economies don't run deficits. Healthy economies run deficits only during recession periods, and they run surpluses, or at least a balanced budget, during good periods. As simple as that. I mean, even Keynesians believed that. I mean, we've gotten to the point that Keynesian theory has become too hawkish for the people that are in charge. So they've in essence reformed it to like a neo-Keynesian kind of perception, which is like, you know, Keynes believed that government should run deficits to stimulate the economy during bad times, and they should like run surpluses during good times. Now we have the vast majority of the governments that believe that we should run huge deficits during bad times and very big deficits during good times. So who's going to pay for all that?
Oh, you never heard of zombie economics?
Yeah, that's zombie economics. Exactly. Yes.
Yeah. All right. All right.
Yeah.
So,
but Baroque is actually right with what he says. A lot of people, and we've said that, are asking, how the hell can the US dollar be even a
Yeah.
little bit higher than where it began the year, when a year ago we were pricing in 3-4 rate hikes for this year, and supposedly um, um, uh, quantitative tightening being in autopilot, and we ended up having a resumption of quantitative easing and 3 rate cuts, and the DXY is still a little bit higher than where it began the year. And the answer is what he is writing. Negative rates are pushing massive capital flows to US dollar assets. And you know what the fun part is? Gundlach spoke about that in his interview as well. And this is the most dangerous part of all. He said that the dollar is being artificially supported by flows due to many areas of the European Union, mostly having negative rates, and Japan, etc. And he says, due to those negative rates, the people that are actually buying US dollar assets are doing it naked. And for those that don't know what naked means
Unhedged.
without hedging the currency risk. Because if they try to hedge the currency risk, then they're going to lose all of that little yield they're trying to chase. So that actually means that when the dollar turns lower, everybody's going to be like, in an overcrowded theater with just one exit. And everybody's going to trying to run for the exit because they will have tried to catch a 2% yield. And if we're talking about real yields, I mean a 0 point something or zero yield. And they might find themselves 5%, 10% out of the money just
Because of
by
currency.
reversal of the dollar. And then everybody's going to be
Interesting.
running for the exit, and they're not going to know what to do with it. You know what I mean?
We'll tell
So
them what to do.
yeah, yeah. So that's why he
Anyone that
also
doesn't know what to do, we'll
yeah. So
guess and tell you.
that's why he also believes, and that has been my thesis for the long term, that the dollar is in the medium to long term doomed. There is no way that the dollar can stay at these levels. It's going to head south, and it's going to head south, in a very massive way at some point in the, not so distant future.
Did he
And then
say what currency will gain favor? Every currency against the dollar?
he believes that the dollar is going to he believes that this situation might last for another 1-2 years. There I disagree with him. I give it maximum 1 year. He believes that it might be like double that. And then he believes that the dollar is going to be massively devaluated, in
Yeah.
essence, against everything.
Yeah. Okay. Thank you, buddy. All right, why don't you go over, does Stel have anything else he wants to talk about?
Stelio,
No,
by the way,
I'm just fascinated by. Yeah, go on.
since you were mentioning the SEC, if you remember, we were actually taking hints from the SEC from some time ago about where the dollar is moving. And adding to that, I know I'm not only short USD NOK, as you know, but I wrote it on Friday in the chat room for whoever was there, because it wasn't very active hours. It was a Friday, and it was quite late. I'm also now short the Euro NOK because of this pattern, and I know that you're interested. I
Yeah,
mean,
I'm sure that too.
yeah, Euro NOK got rejected from that ascending wedge once again. And this rebound higher had clearly corrective characteristics. And once we cleared that previous low here at 10.078, I got triggered short the Euro NOK as well. So I'm now actually short both the USD NOK and the Euro NOK. So I only have NOK exposure now. I'm long NOK against both the Euro and the US dollar. I'm pretty sure that you approve.
Oh yeah. Thank you. I have nothing else actually. I'm just fascinated by the stuff you say, and I agree with most of it. I also think the dollar in the medium term is going to have to take a leg lower. And remember, some weeks ago we were talking about the same thing about the DXY before the 180-degree turn of the Fed, and it was exactly levels that it is now, which makes no sense.
Yeah,
right?
I think we
So
opened the year at 96 and
97-ish, and we're at 97-ish.
96.10, 96.20, something like that. I think
Yeah.
we closed last year or something like that. So in essence, we are completely unchanged having to do with the DXY, while we've had a 180% degree reversal in everything that was expected from the side of monetary policy. Not to mention that even if we want to go into the fiscal policy, we've seen a huge acceleration of the deficit month by month. So even from a fiscal perspective, things are much, much worse than last year. And still the dollar is completely unfazed. And Gundlach believes, and I think it makes sense, that it's actually due to all the money in the negative yielding areas of the world that are pouring in US assets. But that has a limited time ahead that can still keep working. Neil is asking, sorry, what is happening about the Brexit? Stelios already covered that. Bottom line, nothing yet. Now, Boris Johnson has an overwhelming majority, so theoretically speaking, he should be moving forward as planned. So there is nothing really new. Now, we have questions about Euro USD, Euro Kiwi, Pound Kiwi, Kiwi, Pound. I'm going to cover all that. Blake already covered like the euro and the pound, but I'm going to very briefly say that, big rejection on Friday. We were even poking our head above that previous high, but that doesn't mean that the euro has failed, right? I mean, it means that we just didn't break out on Friday. Look at this. We're testing once again this trend line. And as I've said, 111.80 is all that you should care about, and not on an intraday basis, right? A daily close above 111.80, I think, is going to lead to a squeeze. So you have every reason to want to be short against 111.80 on a daily closing basis. But if we do close above 111.80 on a daily closing basis, I think you shouldn't be short the pair anymore, because there is a very good chance that it's really going to squeeze people higher. And especially now that liquidity is drying out, as Blake said, don't underestimate the ability of the market to squeeze people. I mean, just a few 100 million. Stelios can tell you he was a market maker for many years in big banks. Just a few 100 million during illiquid days can really get the market moving. And keep in mind that normally the FX market is a market that has like a 5 trillion dollar volume on average per day. But during days after Christmas, before the New Year's, the liquidity is like extremely thin. So if somebody wants to squeeze the market, and I mentioned the example, I don't know how many of you remember that, but I mentioned the example because I remember it very vividly. I mentioned the example. I was short the Euro USD, and they pushed the market above 140 or almost at 140 during, what was it? What day that was? Yeah, actually it was, when was it? Here it was back then. That was one example. And then it was, when was it that we had the December, that we had the squeeze? Yeah, that spike higher here. I remember it. This spike higher that you see, it was on a 27th of December here. They pushed it, at a very liquid day. We opened up, as you see, at 136.88. And at some point on that day, we found ourselves at 139 with really zero liquidity in the market that day. I remember it vividly because I was actually short. I was looking for lower levels. And, good thing that I didn't actually have an actual stop in place. Otherwise, I would have been stopped because I would have placed my stop loss above that high. But I usually, in things that, are quite liquid, and I'm not afraid that they're going to do like something very, very crazy, I don't actually place real stops. I mean, I have mental stops for daily closes. So, I escaped that one. But a lot of people got actually stopped out that day. So anyhow, Euro USD testing key level here. Since we have questions about other Euro pairs, we can have a look at the Euro Aussie holding. Just look at this. I mean, it's a big formation, right? Still holding here. Euro Kiwi though, holding as well, but look at this. I mean, very, very heavy. And I mean, we're testing this symmetrical triangle support again and again. It's going to be, a very bearish development if we actually fail below that. We already had a look at Euro NOK, as I told you. I'm now short the Euro NOK as well since Friday. So, I'm short the Euro and I'm short the US dollar, but both of them against the NOK. Now, having to do with the pound is holding up quite nicely. Yes, we did have quite a big pullback. I mean, it makes sense. The market priced in, we had a big move higher, and we might see some type of a corrective move lower. But keep in mind that as long as we stay now above 130, you have absolutely no reason not to be constructive the pound, right? And the next real resistance I see above this previous high at 133.80 is at 136. And I really believe that it's quite easy for the market to make it to 136, right? If you remember, I was warning you when we were trading within this consolidation that keep in mind that once we break through this consolidation, 133 is a matter of days. I specifically said that 133 is a matter of days to happen. And we got 133. We actually got 135. So once again, keep in mind that if we don't start correcting lower here, in which case I believe that 130 is going to be very strong support. Very strong support. I mean, I cross my fingers to get an opportunity to buy the pound at 130. I don't think I'm going to be that lucky, but I would love to get that kind of an opportunity. I think that people are still trying to fight this market, and this makes it extremely likely that we're going to see 136 before seeing 130. Also, we had a question about the pound Aussie. Here's the pound Aussie. Pound Aussie has broken out. As simple as that. Just look at this. Just look at this massive formation, an expanding triangle, not a very frequent formation in this kind of a time frame, right? I mean, you can get expanding or megaphone patterns, they're called. Otherwise, it's the same thing. Usually, they're lasting, for shorter time periods. In this case, this was quite massive. I mean, it's been ongoing since like the first few months of 2018, and now we've broken above that, and we have a nice confluence of resistances roughly at 196.50. So I think we can easily make it there. And having to do with the pound Kiwi, I mean, this was very clearly a corrective formation in the pound Kiwi, and both the price and the RSI have broken higher. So I think that the pound Kiwi can keep on moving to the upside as well. So that's what I think about these pairs that you asked about. Please also check Pound Aussie and Euro Aussie. Yeah, we did that. Hello to the entire community from Ingmar. Hello, Ingmar. Let me go back in time and see. Jens also low on momentum after initial rally with tariffs. Gundlach thinks it's possible that the next correction won't be compensated for several decades, just like others. Yes, it's exactly what I said. I completely agree with that. I think that we're so much overdone, and the U.S. Markets are so much overpricing anything that has to do with the U.S. economy that it is a decent possibility. It is a very, very decent possibility. And I think that whoever is buying US assets so late in this cycle, and they're not doing it for short-term trading, because I mean, it's totally legit. I mean, we are in an uptrend. I mean, I understand anybody that wants to be long, but people that are considering themselves like, long-term investors and are actually buying things at valuations, these kind of valuations, either we're talking about bonds or we're talking about stocks. I mean, in my opinion, it's sheer madness. As simple as that. It makes no sense. Now, having to do with the Aussie, I totally agree with Blake. I mean, that was like a big failure here. Confluence of resistances. We got rejected from the 200 daily moving average. Actually, we never managed to close above it. Then we intraday, we got rejected from this zone and the 61.8, and we closed again below this channel, right? So, I mean, can the Aussie squeeze higher? Yes, it certainly can, but it definitely failed to do so on Friday. So, you need to keep an eye on that. And the Kiwi, keep an eye on Kiwi as well, because you can see it here. The Kiwi is actually testing. It's trying to break above this descending trend line, and the inverted head and shoulders formation target is not that far away. It's at 66, 65 or whatever. So Kiwi remains stronger. Aussie Kiwi is making another attempt to break below here, but keep in mind we've put quite a nice daily reversal at 1039, so there is still the chance that the Aussie Kiwi is going to push higher again, as long as we trade above 1039. So we might see Aussie making the move and actually clearing that area of resistances. And if that happens, especially during these days, same deal with the euro. If we clear that heavy resistance area at 111.80, same deal with the Aussie. If we clear this heavy resistance area above like 69.30, both markets can squeeze higher, especially given low liquidity environment that we have. Now, having to do with stock indices, I mean, we're still pushing all-time highs. Momentum is definitely unimpressive considering that the market got everything it hoped for. I mean, we got almost a definite phase one deal. We got like a good outcome having to do with Brexit moving forward, having to, in the UK elections. So theoretically speaking, I mean, the market got all it wanted, but it seems to be running out of steam. So is that enough to go short the market? Perhaps not. But would you be really buying it up here? It can definitely squeeze. I mean, the Santa Claus rally, for those that don't know, doesn't in general mean the period near Christmas. It means specifically the week, the trading days between Christmas and New Year's. So this is one of the best performing weeks, like that, and it's called the Santa Claus rally. So yeah, we might continue to drift higher during the Santa Claus rally days, but also keep that in mind as well. It's very frequent to put in a high or a low at the very last days or at the very few days of a year, of a month, of a week. Of course, the bigger the time frame, the more important that high and low can prove to be. And I gave that example previously. The all-time high in the Nikkei, which is still holding, we saw it at the 29th of December of 1989. So in a few days, that's going to be 3 decades old, right? And it got registered in one of the last few days of that year, of that decade, and it's still holding. Coach?
Yep, I'm here.
Yeah, I heard you. If your guest is here,
Yeah, you just arrived. If you're through with the questions.
yeah, we now have somebody asking about gold and silver. Blake covered that, but I can gladly go over it. Let me be very clear. I'm very, very bullish the precious metals. Okay. Now, does this mean that we're going to break out immediately from here? Not necessarily. But a daily close above like 1485, 1490 worst case scenario, that's it. Gold is gone. I mean, it's going to be pushing towards 1586 to 61.8 from the all-time highs in no time, in my opinion. And silver, an equivalent formation here, daily close above 1730, I think we're headed higher once again. So I remain bullish both the metals. As simple as that. Okay, coach.
Pretty
So
simple.
yeah, pretty simple.
Don't wait to buy gold. Buy gold and wait.
And wait. Yeah.
All right.
Yeah. Yeah. I
all
mean,
right.
in my opinion, the chances that you're going to buy gold and you're going to look back in a few years and consider it a bad investment, the chances are very,
Zero.
very insignificant.
Okay. I thought you were going to say it's a fact that there'll be a lot higher.
Nothing is zero in life. I
All
mean,
right.
the
Okay,
only
good.
certainty in life is death. Okay, and taxes if you live in the Western world. But
Yeah.
everything else, I mean, it can be almost certain. But in my opinion, buying precious metals and in a few years, you're going to be making money almost certainly.
There's only one other thing that's certain, is our need to give and receive love. That's why we're here. So anyway, I'm going to put Adam on after
Okay.
that profound statement. Do you agree with that?
Oh yeah, absolutely. Absolutely.
I
It's
mean,
definitely it's
are we
definitely
here to
one
collect pips, be pip farmers, or
it's definitely one of our instinctive needs and human needs.
Okay, I'm going
Absolutely.
to start crying now, but I better get Adam on here. All right. Thanks,
Enjoy,
Steve.
coach.
All right. Okay, Adam. I just promoted you. I'm going to unmute you. And it was really great to have you back. The screen shares the green box. There you go.
Hello, do we have the audio here too?
Yeah.
Yeah.
You're a little low. Can you turn it up a little bit, buddy?
Yeah, let me see what I can do. How's that? Is that
It's
a little
already
bit
better?
better. Yeah, it's
Yeah.
already better. Good.
Yeah, thanks, Adam. So happy holiday season to you, buddy.
Well, and to you guys as well. I'm feeling the love here. It's lovey-dovey Monday.
Yeah, anyway, you have to bring your violin and handkerchief when you come to be interviewed by me, buddy. So, what I found interesting, Adam, is that, you're always willing to come on and talk about, what you're seeing in the markets. But this is the first time you said to me, I really want to talk about what's happening to the debt markets in the oil patch that could be a big factor in 2020. First time you've ever come to me with a topic that you felt like you really wanted to get the message out.
Yeah, I mean it's something. A lot of things are really starting to come together and happening in oil, and I mean we can all see the chart, and I can pull it up.
Yeah.
That I think it's just been overshadowed in the last couple of weeks with the Brexit vote, with a lot of the economic moves that are happening, the trade war.
Right.
And if you look at oil, I guess in general, if you look at the last year and you just exclude the first few days of the year because it was so volatile around year end last year,
Yeah.
this range here between 50 and 65, call it, that's the narrowest range in oil in 16 years.
Wow. So
And
it's
what
kind of
happens-
lined up with, compressed ranges we have in FX too. The only thing that's expanding ranges are maybe the metals and stock indices.
Yeah, and what's the old thing you do in a narrow range? I mean, you really have to watch it for the breakout and the big move, right?
Right.
So that's kind of where I'm at. That's where I start from in oil, and then to build it out from there. I mean, what's the biggest story in oil in the last 5 years? It's shale, right?
Yes.
And if you look at debt issuance and what's available in the last year, really, the market is just closed. It's completely closed to shale now. There were a lot of, I think, promises, and just the market has changed into a deleveraging theme on everything and a free cash flow. And it used to be about you could take on more debt if you were drilling for oil, and you could issue more stock as long as you were growing production. And that's really the story of shale for the last 5 or 8 or 10 years.
The growth of production.
Right. And that
Yeah.
was fine. If you were a company, you could do that. And now the switch has flipped into the market to say, you got to make money. Let's see it now. Let's see the dividends. Let's see buybacks. Let's see free cash flow. And they're just not able to flip the switch. And the debt market's saying, listen, we're not lending you any more money. And if you look at shale, it really kicked off in 2010. And 2010 to 2014 was really the cheap money era for oil.
The Bakken just got developed.
Right. It was just all starting. They were throwing
Right.
money at it. I mean, this is the start of the ZERP era, right? And
Right.
oil was one of the first things they threw it at before tech really boomed. And that paper now is coming due, right? So it's 2010 to 2014. It's a lot of 10-year paper there, and it's coming due 2020 to 2024. And so number one is there's going to be a lot of pain in the debt market because they're not going to be able to refinance at anything close to what they were paying now, if at all. So you have bankruptcies, and you're seeing it with like the Chesapeakes and some others down the line.
Yeah, Chesapeake, are they on the verge of bankruptcy? They had a decent recovery last year, but I guess the debt has finally come home. This is maybe a poster child for what you're looking at.
Exactly. I mean, they're the kind of the first off the mark. I'll throw it over to a Chesapeake chart here before we. But so it's but there's so many more down the line, and there wasn't any differentiation in U.S. oil, right? So you had Bakken field, you had this Marcellus field, which is a lot of gas, and you had the Permian Basin, which is the main field, and that's the strongest field. But these other ones they're finding, and just last week Chevron took a huge write down in the Marcellus, basically wrote it all off, and that there's really only one good field. The Bakken is busted here now. The Permian,
You mean it's tapped out?
there's just no money coming in. It's uneconomical. And I
Okay.
think what happened, if you go back even to the bust in 2015-16 in oil, is a lot of people went bankrupt then. And a lot of equipment came back on very, very cheap.
Right.
And that kept the party going a little bit longer.
So it's kind of like an echo. We had like a kind of an echo to the initial boom after the first bust. And now we're facing almost the same situation. Now, what I've been told, I want to ask you, you're talking about they can't make money. Is it because of the quality? Like I interviewed a guy who's an oil expert professor from University of Oklahoma, and he's saying that really the problem is with fracking is the quality of light. No one wants it.
It's too light. It's too light.
Okay,
right
so
now.
is that one of the reasons why? Who's going to finance a product that is out of favor?
That's Chesapeake there, just to close up for them.
Oh, okay,
You're down
yeah.
to 78 cents.
Oh
You
my
can see
God,
there's
yeah.
nothing left in terms of support here. I
Yeah,
mean,
boy, McClendon must be, rolling
well,
over.
I mean, he
You know what
knew.
I mean, buddy?
He knew
That was his life's work.
that was
Uh, anyways, all right.
So yeah, that's part of the story. But you can blend that out, and I think there's a little bit more demand for Canadian oil because of that. But you can't get it there because there's no pipelines that go north south. But
Okay.
it is really any business is profitable if you're borrowing money at 0%. I mean, all you have to make is a little bit of money and you're profitable. But if you're paying 9, 10, 12%, now your whole economics change in the industry. And I think we're at that point right now. And plus, if you want to go and refinance, do you really want to lend money to oil for 10 or 20 years, not knowing what the state of play is going to be in energy 10 years out? Right?
So is this going to be like short-term negative on price as we go through a liquidation stage and long-term bullish because you're going to be taking off supply that may never come back?
Well, that's the big thing. And I think it's a little more short-term bullish than that. So that's how it all
Okay.
plays out, right? Everybody is going to run. I mean, you start getting some bankruptcies and big write-downs. Like that's Chevron taking a write-down. I mean, it's a super major, right?
Yeah,
So-
I didn't know they were.
Yeah, and then
Okay.
you have the smaller ones are just getting hammered. I mean, the prices are down so far, and it's not really getting the attention. But built into a lot of the oil price forecasts over the next 2 years, 3 years, is more and more shale coming online. So we're at, think about 12 million barrels per day in the U.S., 12.8. And that's supposed to grow to 16. I mean, that's sort of the long-term outlook. But now we're starting to think we might see the peak in the next 6 months. because all these companies that were growing production are saying, listen, the market doesn't want production anymore. They want to see cash. So they're cutting costs, they're cutting drilling, and they're running out what they have. And it's just a matter, the big question, the open question is, how productive are the wells they have left? So if you listen to some of these oil executives, they're saying, no, we were drilling the second tier stuff before, and we still have a lot of this tier 1 acreage, and we'll drill that when prices are higher. But to me, that just doesn't have any believability. They've been drilling the best stuff. The best stuff's gone, and they're going to get into poorer acreage here, and the economics start to get even worse. And so drilling really drops off even this year, and the market is going to start to tighten up.
Okay.
And if you look at sort of the long-term outlook, to bring on things that are not shale, offshore or major
It takes
greenfield,
forever.
it takes 4 years. So
Okay.
you're starting to get this mismatch now. If U.S. production tops out here, and you don't have anything coming on for 4 years, if it ever comes on, and you have a lot of decline in shale quickly, then I think next year could at some point have the real pop in oil. And I just think it's just not out. And in terms of the inflation story starting to feed back in, right? In terms of, gas prices go back up. Sure, that's the kind of unique factor, but it starts to get people feeling a little bit of inflation. You get inflation expectations. Maybe you get some wage growth on that. And it starts to flip the whole central banking script. So to me, that's the big unknown right now is oil, and nobody is talking about it. And you
Yeah,
see
it's hard to find even with the stability in the oil market here. To me, like, I'm trying to top pick it in here. To me, it seems like, 61 and a half is going to get all the technical analysts constructive on the market. Don't you think, buddy?
Well, yeah,
That's
and
kind of,
it kind of even just sort of in the last week or so, we saw
Yeah.
some levels start to give out. I mean, you had that
Yeah.
Saudi spike, right? So what do you
Yeah.
even do with that line on your chart? I mean, it was 2 days, it was up over there. So I don't know, maybe you forget about that and you watch this 60, 61 kind of zone and see if we can pop above that. But it's a nice
Right.
little trend coming here.
That's a beautiful
And
triangle. It's a pretty, it has pretty good magnitude too. You're talking 77, talking about $30 range, $35 range. So that could take us to 80, 90 on a breakout. Is that what you have in the back of your head?
I think, I mean, what happened, I guess then you start to get back into OPEC, right? Because they do have
Yeah.
a couple million barrels of oil that can be tapped. And what happens if you get oil back up to 80? Well, all these companies I'm talking about in shale that didn't look so good, well, they start to look a lot better again. So
Someone's commenting that it's not true that major oil companies have highlighted the parent-client relationships for a while now. I'm not even sure. Do you know what that question means?
So is parent-child.
Oh.
You have 2 wells, and the way they drill now
Oh,
is you get the decline rates in how you drill is what that's related to.
Okay.
Just to simplify it. And yeah, it is out there. I think what they're saying is a lot of people in the oil market are starting to highlight this. But
Okay.
outside of it, to a more generalist audience, I don't think there's any sense of what the risks are and the opportunities are. And where the money's going to flow kind of back into traditional oil. I think there's a really interesting and great trade shaping up there. And
Okay.
I wonder what happens in the debt market if it reverberates through, and what happens with OPEC. But
How about what happens to the dollar? Are you in the camp that the dollar has put in an intermediate term high up there, Adam, a few months ago?
well, yeah.
Because that would play into at least the nominal value of crude. With a weaker dollar could be supportive of everything tangible, right?
Well, and then the money starts to flow out of the U.S., right? It's one more thing. Investment dollars sort of go back into more traditional oil, which can be U.S. I mean, there's Gulf oil there as well, but towards maybe some emerging market fields, and with if you have the global growth story, it's pushing up crude anyway, pushing up commodities.
Right.
We had this stability in the Fed, which is the much bigger factor. And I think the money's going to go out into emerging markets.
Okay. I am so glad I have you here today because I've asked a few people about this. What do you think is behind the problems in the overnight repo market, Fed funds market, Adam? We know it wasn't a big tax payment needed by one of the banks.
Yeah.
So they're afraid to lend to each other. You have any idea what's going on there? Is that a canary in the coal mine about structure of the markets right now?
It was if they it was the Credit Suisse note last week, really, or 2 weeks ago, I guess it is now, raised a lot of the real concerns. So it started out, it kind of came out of nowhere for a lot of people. I mean, I'm
Right.
not deep in the market plumbing. It happened. It made sense on the corporate payment issue at first, right? And then it persisted.
Right.
So that can't be the problem.
Right.
And if you read some of the notes, the way the lending works is a lot of it is really through JP Morgan. They are at the kind of top of the food chain here as this lender. And they started to pull back in part because capital rules, but there's also some thinking there is that they wanted this to happen because they don't like the rules about liquidity. And so the question, right? I mean, there was a repo today just before I came on, and it was 120 billion offered, and only 36 billion was taken up. That's just an
Okay.
overnight repo. So there isn't a lot of tension there. But if you look at
Right.
pricing over year end, it's up around 4%. We're still early. So that's going to go up higher. And the thing is, so you're a bank, you have all this collateral at the Fed, and you can lend that out, but only it's working right now with bills and short-term paper. And that might be maxed out. And what people really need to lend is treasuries. And so
And that's the safest paper. Everyone wants them.
The way it works, though, is you can't use that as collateral.
I see.
And so that
So
you might
Jamie
have,
Dimon is coordinating this so he could have the rules change and maybe use T-bills for collateral and
yeah,
other things.
paper, bonds for collateral. But the thinking was there just wasn't enough liquidity out there. So the Fed's pumping in all this liquidity with bills and borrowing that and trying to get more and more of that. But they want to lend bonds. And the problem is if the crunch comes down, they might have to sell bonds. And that's kind of where you're going to see it. And that, I think if you want to watch something, it should be probably around the 10-year space, because if there is a liquidity problem, you end up having to sell bonds, and then that kind of roils the market, right? If you start to push this up over 2%. So that's 10-year note yield.
Right.
It's really down here at the bottom of the range. But if you were to see this sort of spike up, then you might get a Fed response, and then maybe even changing the rules, and then you're pumping more liquidity back in, and it's just party time for stocks, for risk assets, for emerging markets.
Wow.
And that global growth.
Yeah, it's a great explanation. So anything else you want to talk about? I'm going to have to watch this again just to absorb it all. But basically, this oil thing could be kind of a catalyst for everything else around it, instead of it just being kind of an outside influence on the markets.
Yeah, I think it's overlooked right now. I think you have to watch it and how that's going to sorry, I screwed up my chart. How that's going to feed kind of back into the debt market, because there's a lot of places in the debt market that's been very easy money. And,
corporate debt. You see that a lot of people talking about. That's really the next bubble. A lot of corporate is really been downgraded to just a hair above junk.
It is, and this is kind of this cliff that's very interesting, right? So you have so much is just a hair above junk, and if you were to have an economic slowdown, then it all becomes junk, and then there are no buyers for junk at that, the amount that's out there. So
okay, so really, isn't that junk what companies use that debt to finance stock buybacks and pay out dividends? They certainly didn't use it for expanding plants and equipment.
Yeah, that's exactly it.
So they're long their own shares on margin, and the cost of their margin loan could go up, forcing them to maybe. Can corporations ever liquidate? You always hear about buybacks. Can they also put those shares back on the market if they have to?
No, I mean, you just kill your share price if you start to do that. So
Okay,
y-
so
it is. I think what is happening in oil is
they own their own stock with debt. It's
yeah, but
like a
the
margin
shares are
loan.
canceled, so they have to reissue them.
Oh, okay.
The
All right.
and I think what's happening in oil is probably I don't think I think it's an oil story for next year.
Okay.
But watch it because that's what's going to happen everywhere in the next downturn, whenever it is. And because it's just this, the market's going to go from lending to not lending at all. And unless you're a company that's cranking out cash, you're just not going to be able to borrow anymore. And so you have these kind of markets that are just feast or famine. And one day that you just fall out of favor in the same way that things become the flavor of the month right now, where it's marijuana or something, and they just throw money at it, which is also happening right now. And then one day they look at the numbers and say, listen, this isn't making as much as I thought. I'm not going to lend you anything anymore. So your business just falls apart overnight and the share prices fall apart. And I think that's kind of the nature of the next recession, is that the debt markets were so cheap and then it's just closed, even with the Fed at zero. And
Interesting.
so, but for next year, I'm optimistic. I mean, this Aussie yen chart to me has been, pardon me, Aussie dollar has been a very compelling one. I'm sure you've been looking at this.
Yeah. Yeah.
Broke this downtrend, 200-day moving average.
Yeah.
Looked like we were breaking through the 200-day moving average on Friday, and the deal wasn't so great. It kind of just flirting with it here again, but
And gold looking good too.
Gold.
Which-
I mean, listen.
Yeah.
I mean, I just heard Steve talking about it. I couldn't
Yeah.
agree more. I mean,
Yeah.
and there's a seasonal tailwind for gold that really starts about now and goes through February. So it's,
All right, why don't we wrap it with trade? Because according to my eye, if I pull up the weekly chart of gold, US dollar yuan, and TLT weeklies, they all look bullish to me, and like they all could break out and make new highs. Does that mean anything to you? If for example, we had a trade deal look like kind of a stop hunt on the daily or intraday on the yuan, and then it came back Friday like a champion, and looks like, I know it's managed quite a bit, but it looks constructive, just like gold and the bonds do.
but
Am I
that's just
still
a
here?
little bit worrying, right? Seeing the bonds look strong.
Hello?
Yeah, I think, but
What happened?
oh, you still got me, Dale? Or did we just lose you,
Hello?
Dale? I'm
You
surprised.
hear both of me? I can't hear Adam.
I can hear you. No.
I wonder if it's something I did. Adam,
I can hear
can't
both of
hear
you guys.
I don't know if
Okay.
you could hear me.
Okay.
Coach, can you hear me?
Okay, everyone could hear us. So I
Hey,
don't know
Adam,
why
how
I
are you?
can't hear you.
This is Blake.
Hi, Blake.
Can you hear
Hey.
me, Adam?
I can hear
I
you.
Well, let me type to him really quick.
Okay. So anyway, since I can't hear you, Adam, I want to wish you and your family a great holiday season. I can't hear Adam, so it's got to be me. Anyway, I want to wish you a Merry Christmas, a Happy New Year, and I'm so glad that our paths crossed and that you come on and edify faith like this. And I read a comment that some of our attendees read your stuff every day. Thank you for what you do for the trading community as a whole, and taking time out to hang out with us here in Face whenever I reach out to you, buddy.
Thanks, Dale.
Thank
I
you,
don't know
my
if anyone
trading
can hear
warrior
me.
brother.
Thanks very much. Yeah, Happy New Year to everyone.
And with that being said, since I can't hear anything, everyone
Thanks,
have a
Adam.
great day. Good
Cheers.
hunting.
Cheers.
And we'll see you tomorrow, and maybe I'll be able to hear everyone tomorrow. Makes you appreciate hearing. Thank you, Adam. So that's a wrap, everyone. I'll see you guys tomorrow. Thank you, Brock. We have David Jansen tomorrow, the real one. So that'll balance out Adam's optimism. I'll see you guys tomorrow. Remember, don't just, I don't know. Don't just count your pips, count your blessings, and we'll see everyone tomorrow.